Joining us right now is Sam Stovall. He's Chief Investment Strategist at CFRA Research. And Sam, you've been studying the markets, seeing what's happened recently. You've got some good news and some bad news, but let's be optimists this morning. Let's start with the good news.
All right, Becky. Well, good morning. The good news is that as of the end of August, we've had three very impressive milestones take place. First off, the year-to-date performance through August was in the top 10. Actually, it was number 9, going back to 1928. Also, when you look at 53 all-time highs through the end of August, that was actually the highest on record going back to 1928. And we also recorded 7 consecutive months of positive performances. There have been 14 other years in which we had 8 or more. So a lot of good news out there. As Mike Santoli just mentioned, the bull market is taking the escalator. And as Joe mentioned, that bear markets take the elevator. So usually step up slowly tend to be fairly positive.
So that's all good. What's the bad news?
Well, the bad news is that this momentum heading into September historically really has not undone the challenge that September typically presents to the market. Over the last several decades, what we found is that the market has actually fallen more frequently than it has risen in September. And it's the only month to have both an average decline and frequency of decline. But when you then say, well, what about following all-time highs through August? What about following year-to-date performances? What about consecutive strings of advances? The numbers don't look any better. We're still looking at only about a 44% frequency of advance in September, about a 68% frequency of advance for the remaining 4 months of the year. But that said, I would say be aware of it so that your emotions don't become your portfolio's worst enemy. And remember that of all of the declines of 20% or less since World War II, we got back to break even in an average of fewer than 4 months. So History would say you are better off buying than you are bailing.
Okay, what Joe and Mike also talked about has been this issue of the cash on the sidelines and how many people are kind of waiting for that 5% drop so that they can jump in. I just wonder how much of that prevents us from ever getting a 5% drop. It's been a long time since we've seen one.
Oh, absolutely. And, watching your program this morning since 4:45, basically every other guest is talking about how bad September is. And usually when everybody is looking for a bad September, it doesn't happen. In the last 7 years, the market was lower 4 times in September. So the percentages even recently have held up. But at the same time, it means that the market was up 3 times in September over the last 7 years. So, my feeling is continue to focus on the fundamentals. Also look to the technicals because fundamentals might tell you what, but technicals tell you when and how far.